are getting a breaking right now. IIP for December has jumped to 8Q 26-month high of 7.8%. The IIP data is out. Industrial output has risen 7.8% versus 6.7% in November. If we look at the industrial output, versus the estimate, so it stands at 7.8% versus the estimate figures of 5.9%. Now, if we look at the mining sector output, so the growth it stands at 6.8% versus 2.7% year on year. If we look at the manufacturing output growth, so that stands at 8.1% versus 3.7% year on year. December IIP growth of 7.8% is considered to be the highest in 26 months is what we are getting to know right now. And also, if we talk about the electricity sector output growth, that stands at 6.3% versus 6.2% year on year. Primary goods output growth also stands at 4.4% versus 3.8% year on year. And also capital goods output growth at 8.1% versus 10.5% year on year. Consumer durables output growth stands at 12.3% versus 8.1% year on year. And also if we look at infra goods output growth, 12.1% versus 8.4% year on year. And also intermediate goods output growth stands at 7.5% versus 6.4% year on year. Now, I am being joined by Aditi Nayar, Chief Economist, Head Research and Outreach, ICRA, on the phone line to decode these numbers for our viewers. Aditi, what are you making of the IIP number that has come out for December?
Thank you. Well, certainly the number has been better than what we were expecting, and it has surpassed the figure for the previous month as well, which we had thought was partly boosted by the base effect. Given the fact that exports were did not show a very high growth in this month, I think that this is being led by restocking ahead of, given the consumption during the festive season. So possibly it is a restocking-led effect which has led to the IIP growth being so high in the month of December.
Right. So, Aditi, 7.8% IIP is also the strongest print in over 2 years. So how much of this, genuine demand recovery is, versus the favorable base effect?
Possibly it's not so much of the base effect. I think it's a reason that we saw high growth in consumption during the festive period. And it's possibly a reflection of the restocking which needed to be done subsequently. If you look at the quarterly averages, definitely Q3, the quarterly average growth for the manufacturing sector within the IIP has been better than it was in Q2, but not by a very huge amount. And the base effects related to Diwali basically sort of cancel themselves out over the course of the quarter. So that's a better way of looking at it. I would imagine that we will end up with a growth slightly above 7% for the overall GDP. For Q3 based on the IIP number which has come out today. Of course, I'm talking about the current base and the new base could be different materially from the numbers that we've been seeing on the present base that we have. But I think that overall we should be in for growth which would be slightly higher than 7% as far as the current base is concerned for Q3.
Okay, Aditi. And also, what does this mean for GDP growth in quarter 3 and quarter 4? Also, should the expectations be revised upwards?
So, like I said, we're looking at a number which is slightly higher than 7% for GDP growth for Q3. For Q4, it's a little premature to say, and of course, we'll be well into the new base year when, by the time the Q4 data comes out. So, I would expect with the base effect and with some amount of pullback in terms of the support from export, Q4 GDP growth should be lower than Q3 GDP growth, both in what we'll be getting for these 2 quarters.
Okay, so Q4 should be more than Q3 is what we are anticipating. And also how sustainable...
No, the reverse. Q4 will be more than Q3.
Okay. I beg your pardon there. And also, how sustainable is this, momentum given the global headwinds and also weak external demand?
So, my view, unless we get trade deals from the US, the growth will be slightly weaker in the coming quarters as compared to the 8% that we saw in H1 and the 20% plus that we're expecting in Q3.
Okay, Aditi. And also, if we look at the consumer non-durable, so they have also swung from contraction to strong growth there. So does this signal rural demand, finally turning a corner?
The sense we have is that rural demand has been building up for the last few quarters. So I don't think consumer durables turning around in the month of December is necessarily a reflection of rural demand turning around. I think it's more of inventory alignment after the GST rationalization, etc., and some pickup in urban demand as well. What we were expecting was that the initial impact of the GST rationalization would have been on big ticket items, which is what we've seen during the festive. But the more lasting impact of the GST rationalization with a lag, and that's possibly coming through now.
All right, all right. Thank you so much, Aditi, for being there with us and decoding, the numbers for our viewers there. Thank you so much for joining us on the show. And viewers, shifting gears now, let's look at how the markets have fared today. So markets have continued to